Hello, everyone. Knox Ridley here, portfolio manager with the IO Fund. And we're going to follow up from our last week's video where we were taking a look at a bigger picture of the S&P 500 to try and anticipate the pattern playing out and what we can expect going into year end of 2022 and potentially even 2023. What we're going to look at now is we're going to have a more of a zoomed in look, and we're going to take a look at the price action that's developed over the last couple months, specifically last week, and see if this is the rally that we've been looking for, if this one really has legs, or if we could be setting up for one more low. And so we're going to kind of build the case and just take a look at some objective facts. So for one, the downtrend channel that developed since the August high, we just gapped up and broke above that. And typically when these channels are taken back, they're done so in dramatic fashions. So a gap up is good. We're seeing a little bit of give back today, but nothing too extreme, nothing to be too concerned about yet. We saw the same pattern in June. So downtrend channel, failure multiple times to break out. Then all of a sudden we just have a huge volume day, like a railroad track bar, if you will, and just continue on from there. And we're seeing this pattern across the board. So if we take a look at the NASDAQ 100, same situation back in June, break out of the downtrend channel, retest it and take off. Very clear downtrend channel attempt right there, fail on that same day. And here we are today, we gap up and we're retesting it today. So we really don't want to close below the low that was filled out today on the NASDAQ 100. That would not be good. But so far, so good. The Russell 2000 small caps have been exceedingly strong on a relative basis. I mean, we had that same pattern breakout in June, retest and take off. Same pattern playing out right now. We gapped up, still green for the day compared to a lot of stocks that have given back quite a bit. So small caps have some very interesting relative strength. This is another thing that I like to see. We're building up for a bigger move higher. Small caps tend to lead down and up. And so far, the strength we're seeing in small caps is a positive sign. So going back to the S&P 500, we're seeing this breakout in a gap fashion, which is good. And if we analyze this structure, another positive thing is no matter how you count this, there's only two potential paths that could be taken: 3 waves down or 5 waves down. 5 waves is more bearish. I have a 3-wave count. That's in blue, so an A, B, and a C right here. But even if you have a bearish count, we have a full complete count in place: 1, 2, 3, 4, and then 5 right here. So that is satisfied with this low that happened last week. Now, if we do fail up here, what that would look like from a count perspective is we would be extending this 5-wave count a little bit deeper right here. And so this is the range that really matters, and the prices I'd be focusing on and that we are focusing on. The bulls need to break out above 3765 first, and then 3830. Now, if we do fail here and go directly down below 3640, then this red count right here is going to be my primary, and it should be a pretty swift drop, I imagine, down to 3345, potentially 3280. These would be my two targets down below. And just real quick, if this does happen, I do believe that a lot of stocks and a lot of markets did bottom, and they did bottom in late September. And so the divergences that we talked about last week, we talked about Caterpillar, the Dow Jones transports. We talked about the U.S. dollar making a lower high while the S&P was making a lower low. They have an inverse correlation. So these divergences are building, and we'll get into that today. So I think the divergences would be even greater if the S&P does make one more low, which would be setting up another great buying opportunity, in our opinion. So that's the level that really matters right now, below 3640, and the odds start favoring that we're going down. Now, on the other hand, if we can break out above this 3830 level, the target overhead that I have mapped out is right in here. I think high odds that we get to 40, 45, 41.25, and we could go as high as 42.05, 43.85 before a bigger decision needs to be made within a portfolio. We'd consider this your raise cash, start looking to hedge zone right up in here, because even if this is the low for this bear market and we're starting a new bull market, this zone right here is where we'd have our first big pullback. We won't really know if this is part of a bear market rally up into this zone or the start of a new bull market until we have a correction from this zone. So those are our overhead targets. But first and foremost, this is the range that's really going to define what's going to happen this month and going into the end of the year. So just keep those levels in mind. So we talked about divergences. I want to go into that a little deeper, like we talked about the Dow Jones Transports last week, where they made a low in late September, where the S&P 500 here in blue made a lower low and transports made a higher low. And this is the kind of stuff we want to see when confirming some kind of trend change and a reversal to the upside. I want to talk about high beta stocks. So the same pattern is playing out right here. This is the iShares Momentum ETF, just a collection of high beta stocks. I like it as a proxy to high beta plays. And so they bottomed in late September, along with transports, and the S&P 500 continued lower. You can see that divergence here as well. So we have the same thing going on with small caps, Caterpillar, Walmart. I mean, there's so many divergences going on across the board. What I also like is this. From the low, we have a nice little 1, 2, 3, 4, 5 waves up, higher low, 1, 2, 3, 4, 5, higher low, 1, 2, 3, 4, 5. And this is building up for a big, big move. If we can get a breakout above this 139, 140, usually in a gap fashion, we should see heavy volume come in, and high beta, this high beta ETF and high beta stocks that are seeing similar setups would benefit from a pretty big move. And it could be a leading indicator to what to expect in the S&P 500 as well. Like I said, they bottom first, so they tend to be leading those markets. Financials are looking phenomenal as well. They actually made a new low with the S&P 500, but the move off the low is pretty remarkable. And a lot of the bank stocks that are coming out that reported earnings are doing a lot better than everyone expected. They're actually doing quite well in this environment, which is why we're seeing financials do so well. They've already taken back their October high right here, and they have a full corrective pattern in place. So this is one of those sectors that even if the S&P 500 does collapse from here, I would expect financials not to make a new low, and just building the case for the divergences. But the main divergence I want to talk about today is really what's going on internationally. And, I'll just kind of build the case here. This is the S&P 500 from the COVID low to the 2022 top. And if we compare this to other markets, I mean, what you really want to see is you want to see all markets moving in the same direction, right? Like in 2017, that was a powerful uptrend, and every single market was moving in the same direction, which defines a healthy trend. And we saw this pattern playing out in 2020 through some of 2021. And so we'll kind of go over it a little bit right here. This is the Australian equity market, and it topped here in August of 2021. And so it started making a series of lower lows while the S&P continued higher. And then we see the same thing with the Chinese index. So it topped here in September of 2021, and it started making its downtrend moves, and the S&P continued higher from there. Same pattern playing out with the Nikkei in Japan. And the Canadian index, it actually, even though it went higher right here, this was the top. This is part of a corrective pattern in play right here. But it actually topped here in November, along with the German DAX, which topped in November as well. And so the S&P continued higher, making a higher high, as the DAX and Canadian index made a lower high. And so when you put all of that together, these are when all these various markets topped. And like dominoes, one after the other, they continue to go down. And so what tends to happen is either these markets right here are going to play catch up with the S&P, or the S&P is going to play catch up with them. And we know what happened. When you see these divergences like this, it's a pretty big warning sign. And the S&P 500 topped last. And so far, it's bottoming last, interestingly enough. So the same pattern is playing out, but in reverse. And we have various markets that are actually bottoming ahead of the S&P. So the Nikkei actually bottomed here in March. And it's been in a reasonable uptrend, higher highs and higher lows, while the S&P continues lower. The Chinese index, it actually is same situation. It actually bottomed in April, and it's been hasn't made a new low while the S&P has. The Australian index also had the XJO, I think is what it's called, is it bottomed here in June while the S&P made a lower low. And we just see the same pattern playing out across the board. The DAX right here, it bottomed in September along with transports and a lot of those other sectors and stocks we talked about. And it's actually made a higher low, just like we saw with those indexes. So the S&P is really like the last to make a new low. And we just see these divergences building internationally. We see them building within the US. And so for me, that's usually a bullish sign. But like I said before, what really matters is, can we get above this 3765 and 3830? And if we can, that is not where you want to be bearish. It is not where you want to be hedged and trying to front run a short position. That will happen in time if this is another bear market rally. But these are the levels that will really determine the next move. So anyway, I hope that was helpful. And sign up if you like what we do. We do a couple of these per week on our YouTube channel. And we actually go over once a week within our service, our premium service. We do the same kind of analysis on individual stock positions that we own and are looking to own, both with tech and with crypto. And some of the values that we're seeing are just are quite incredible. So if you like that, you can sign up at our service at theiofund.com. Thanks a lot.